Okay, check this out. Industry data, right, shows that roughly 90 to 95% of retail payments in Sub-Saharan Africa were still cash as recently as 2020.
95%, that's huge.
That is. And even now, well, into 2023-24, estimates put cash at about 43% of all point-of-sale payments across Africa and the Middle East. Nigeria alone, something like 62% cash.
Wow, that really sets the scene, especially with all the talk about digital transformation. It's clearly not a simple switchover.
Exactly. I'm John, by the way.
And I'm Wendy.
And we're both staff here at WeWire. Welcome to your Stay Wired Weekly Recap.
Yeah, welcome.
So our mission today is to really dive deep into this African payments landscape. It's this fascinating mix, isn't it? Traditional cash bumping up against super fast digital growth.
Mm-hmm.
We're going to unpack the key movements from this week's Wire Times report for you.
We're basically looking at what the sources are calling a hybrid payments economy. And the real tension, like you said, is cash is still very much king day to day. But these digital options are exploding. I mean, exploding at a pace that's actually leading the world in some ways.
Okay, so let's try and unpack that. It feels a bit like a paradox. If digital is booming, why is physical cash still so, well, essential across so much of the continent?
Well, it's interesting because it's not just about habit or culture, though that plays a part. It's really structural.
Structural how?
Think about just basic infrastructure. So many smaller merchants, especially in the huge informal markets, they just don't have card terminals. They operate entirely in cash, notes, and coins.
Okay, so accessibility is key.
Huge. And then there's trust and practicality. Consumers often value cash for its privacy, sure, but also its sheer reliability. You know, in places where maybe the power grid isn't perfect or network connections can be spotty.
Cash always works.
Cash always works, yeah. The World Bank data backs this up for millions. It's just the default, easiest option for everyday stuff.
But okay, set against that, we've got this massive digital surge happening alongside it. It's not really replacing cash, is it? It's more like coexisting.
Exactly. Coexisting and expanding rapidly.
Because the numbers on digital accounts are just staggering. Sub-Saharan Africa SSA now has something like 1.1 billion mobile money accounts.
Well, 1.1 billion. And get this, that's over half the entire global total of mobile money accounts.
Over half. Wow.
Yeah. It really frames just how central mobile money is. SSA isn't just a market. It's the world's biggest mobile money market by a long shot. We're talking, what, over 2/3 of all mobile wallet accounts globally in 2024 are in SSA.
Okay, I get the scale in terms of accounts, but what does that mean for actual use? Like how much money is actually moving through these things? Is it just small transfers or?
Oh, no, the activity is, it's incredible. Globally, these mobile money platforms processed around 108 billion transactions last year, 2024.
108 billion.
Billion, yeah. And the value was about 1.68 trillion US dollars. That's trillion with a T.
Okay, that's serious volume.
It really is. And it was up 20% from 2023, so the growth is still accelerating. This isn't some niche thing anymore. It's the main way millions of Africans handle their finances every single day, paying bills, sending money home, paying a merchant.
How does that work at the merchant level? Is it complex tech?
Often it's surprisingly simple. QR codes are common, sometimes just printed out, or even basic SMS prompts on feature phones. We saw this great example in one report, a small shop owner in, I think it was Kenya or Tanzania, just taking payments via mobile money. No fancy terminal needed.
So it leapfrogs the need for traditional banking infrastructure in a way.
Precisely. That adaptability, that sort of grassroots fit, is why it's taken off even where banks haven't reached.
And the so what of all this? It must be having a big economic impact, right?
Huge. Yeah, this isn't just about convenience, it's an economic engine. The contribution of the mobile money sector to SSA's GDP jumped significantly. It went from around 150 billion US dollars in 2022 to roughly 190 billion in 2023.
That's a massive jump in 1 year.
It is. When you give people easy, low-cost access to financial tools, you unlock a lot of economic activity that just wasn't possible before.
Okay, let's shift focus slightly. What about traditional cards? Debit cards, credit cards. You hear so little about them in this context compared to mobile money.
Yeah, and for good reason. The penetration is, well, extremely low across most of SSA. The figures are quite stark. Only about 18% of adults have a debit card.
18%.
18! And credit cards, just 3%.
Wow. Compare that to, say, Europe or even South Africa, where bank account ownership is much higher, like 85% or so having accounts.
Exactly. It's a completely different landscape. But that gap, that low card penetration, created this huge opportunity
For the fintech.
for the fintechs, exactly. And what they've done, which analysts like McKinsey point to as a major growth driver, is really clever. They've introduced card-linked digital wallets.
So virtual cards, basically.
Virtual cards, prepaid cards, yeah. Things linked directly to your mobile money account or maybe a basic bank account. Suddenly, someone with just a mobile wallet can participate in, say, global e-commerce or subscribe to international services online.
So it bridges that gap without needing a traditional bank relationship or a physical card necessarily.
Precisely. It connects the mobile money ecosystem to the wider card-based world. It's a really important innovation.
Okay, now for the really futuristic part.
Yeah.
Crypto. We hear a lot about Africa being this hotbed for crypto adoption. What's the reality on the ground for payments?
It's a bit nuanced. It's true that SSA has some of the world's fastest adopters. Nigeria, for example, is often ranked #2 globally for adoption rates.
#2, wow.
Yeah. But, and this is the key thing, its share of actual point of sale payments, like buying your groceries or paying a bill locally, it's tiny, minimal.
So people aren't really using Bitcoin to buy bread day to day.
Not really, no, not on a wide scale. The volume is there, don't get me wrong. SSA receives something like $125 billion in crypto measured on-chain between mid-2023 and mid-2024.
That sounds like a lot.
It does, but context is everything. That $125 billion is only about 2.7% of the world's total crypto volume.
Okay, so still relatively small globally.
Right, and its primary uses, according to the sources, are quite specific. It's mainly for cross-border transactions, sending remittances back home.
Cheaper and faster maybe than traditional routes.
Often, yeah. Also for hedging against really high local inflation in some countries, and for B2B transactions, facilitating international trade for businesses. So it's more of a tool for financial stability and global connection right now, not so much for your everyday local checkout.
Got it. So we had this complex picture. Resilient cash, booming mobile money, emerging virtual cards, and niche crypto use. What's actually driving all these trends happening at the same time? It feels like rapid change on multiple fronts.
Well, there seem to be a couple of major forces pushing things along. First, weirdly enough, was the COVID-19 pandemic.
How so? Necessity.
Exactly.
Yeah.
Necessity proved a huge accelerator for digital payments. People needed contactless options. In Nigeria, for instance, mobile money transaction volumes basically doubled in 2020 compared to the year before.
Doubled in 1 year.
Yeah. And in South Africa, online shopping surged by around 40% during the lockdowns. It forced a shift in habits for many.
Okay, so a major external shock pushed adoption. What's the other big driver?
The other is more fundamental.
Yeah.
It's the continued expansion of enabling infrastructure, specifically smartphones and internet access.
Right, you need the tools in people's hands.
You do.
Yeah.
And the numbers there are also pretty powerful. Take Kenya. By early 2024, active mobile subscriptions were over 130% of the population, meaning lots of people have multiple SIMs, but basically everyone's connected.
130%.
Yeah. So when you put cheap smartphones and affordable data plans into the hands of almost everyone, and you combine that with these really functional, easy-to-use mobile wallets, well, that creates the foundation for this whole digital payment explosion we've been talking about.
So pulling all this together, all the different threads from the Wire Times reports this week, the main takeaway seems to be that Africa's payment story isn't about replacement. It's not cash or digital.
Absolutely not. It's about coexistence and choice. The African consumer, based on this, seems incredibly pragmatic. They use what works best for the situation.
So the outlook, say for 2025 and beyond, is this continued hybrid model.
That's the consensus, yeah. The landscape is shaping up to be, let's say, cash-light, definitely wallet-driven, increasingly card-enabled thanks to those virtual solutions, and sort of crypto-curious?
Cash-light, wallet-driven, card-enabled, crypto-curious. I like that.
Yeah. And the implication for any business looking at the continent or investors is clear. You really need to build systems that can handle all four. You can't bet on just one horse.
Makes sense. Okay, before we wrap up with our final thought, let's quickly pivot to the Stay Wired market snapshot. Just a quick look at the wider market movements, currencies, and commodities from the Wire Times reporting.
Sounds good. So, globally, the big news included Intel stock getting a boost after NVIDIA took a significant stake.
Interesting dynamic there.
Yeah. And the U.S. Federal Reserve cut interest rates this week, citing a cooling labor market. Bit of caution there. Elsewhere, the UAE is forecasting pretty strong economic growth, around 4.9% for 2025.
And closer to home, here in Africa.
Uganda announced some spending cuts and reduced domestic borrowing targets for the next fiscal year. Total Energies got the green light for exploration permits off the coast of Liberia.
Okay.
And Nigeria's central bank, the CBN, was active again, selling about $574 million in August, trying to boost liquidity in the FX market.
Right, always a key focus there. How did the currencies perform overall? Let's hit the FX corner.
It was a mixed bag, as usual. The Ghanaian cedi, unfortunately, is still the worst performer year-to-date against the dollar, down about 41.5%. Those macroeconomic pressures are really biting.
Which probably feeds back into that crypto demand for remittances we talked about earlier.
Good point. Yeah, very likely. On the other hand, the Nigerian naira actually showed some resilience, up slightly year-to-date, about 1.6%, likely helped by those CBN interventions. And the Kenyan shilling was pretty stable, just up 0.12%, probably supported by steady remittance flows.
Okay, and finally, commodities corner. What happened with oil and gold?
Kind of opposing stories there. Oil prices actually dipped by the end of the week. Brent crude ended around $67.29.
Even with the Fed rate cut, usually that might boost oil.
Yeah, but signs of weakening global demand seem to have overshadowed it. Plus, there was a surprise jump in U.S. distillate inventories, nearly 4 million barrels, which pointed towards softer demand.
Okay, and gold.
Gold loved the Fed news. It rallied for the fifth week in a row, climbing up to around $3,660 an ounce. That rate cut, the dovish signal, just reinforced its appeal as a safe haven.
Got it. Okay, so wrapping up our main topic then, the African payments landscape. The core idea is pragmatism.
Exactly. The African consumer isn't picking sides based on ideology. They're picking the tool that works best in that moment. Sometimes it's cash notes.
Sometimes it's a card swipe, or maybe more likely now, a virtual card tap online.
Or a mobile money tap with a QR code, or even for specific needs, a crypto token transfer. It's all about choice and utility.
Which leads us to our final provocative thought for you, the listener, to mull over this week.
Right. So given this huge reliance we've seen on mobile money across SSA, what does the continued rise of these virtual cards issued directly by the mobile wallet providers, not traditional banks, what does that really mean for global commerce? And maybe more fundamentally, could this wave of innovation born out of the mobile money ecosystem eventually pose a serious challenge to the established, often slower-moving, traditional banking infrastructure across the continent?
Something to definitely think about. Where does that disruption lead next?
Exactly. Food for thought.
Well, thank you for joining us for this deep dive into the sources for your Stay Wired weekly recap.
Yeah, thanks for tuning in.
I'm John.
And I'm Wendy.
We are staff at WeWire. We'll catch you next week.
Stay Wired Weekly Recap was produced by WeWire,
a B2B company, bridging the banking gap between emerging markets and the world.
Tune in same time next week for the Stay Wired Weekly Recap.